Hello, ladies and gentlemen. I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, we start with the sell-off in Asian stocks that continued on Thursday as well, with some bourses hitting multi-month low as whirlwind rise in mainland equities markets bought worries surrounding the world's second largest economy. In the previous session, the benchmark Shanghai Composite Index staged a U-turn in the final hours of trading, reversing losses as much as 5% to close up 1.2%. In Japan, the Nikkei 225 index shed 0.5%, hovering near its lowest level since July 28. Traders are expecting a September rise, subdued on a solid dollar, pushing it to a 3-week low of a 123.68 yen in the overnight trade from a high of 124.47. It was last at 123.93. Australia's S&P 200 index gave up on Wednesday's gains to hit its lowest since last January 23, as of course renewed weakness in metals and oil prices extended pressure on the resources and of course energy counters. The Australian dollar rebounded from a 1-week low of 0.7312 to as high as 0.7373, but was cut short by a drop in Chinese stocks. It touched a 6-year low of 0.7217 last week after China devalued its currency, sharpening concerns about the health of the world's second largest economy. The US dollar was on the defensive against the euro as well on Thursday, having pulled back sharply after the Federal Reserve meeting minutes suggested policymakers were in no hurry to raise interest rates. The probability of a September hike is now at 45% from about 50% towards the end of July, according to the Chicago Mercantile Exchange Fed Watch. The euro climbed to a 6-day high of 1.1149, while of course the dollar index was flat at 9.379 after an overnight losses of 0.7%. In contrast to the dollar, the sterling, however, continued to draw support on firmer expectations that the Bank of England will raise rates as early as next year. Higher than expected core inflation in Britain, along with ongoing policymaker David Miles saying a rate hike would come pretty soon, supported the pound. Cable was steady at 1.5681 and within reach of a 7-week peak of 1.5717 scaled on Tuesday. Gold in the commodity sector rose to its highest in nearly 5 weeks on Thursday after minutes from the Federal Reserve's policy meeting last month signaled that a hike in U.S. interest rates in September may be unlikely. Fed officials worried that lagging U.S. inflation in a weak global economy posed too big a risk to commit to a liftoff. Supporting gold that had been out of favor on imminent tightening in U.S. monetary policy. Gold touched 1135.20 an ounce, its loftiest since July 17, and was of course flat in 1134 in mid-Asia trade. Oil markets in the energy sector opened upweek on Thursday following sharp falls on the previous session, with U.S. contracts hovering slightly above the $40 per barrel, levels not seen since the credit crunch of 2009. U.S. West Texas Intermediate crude oil slumped over 4% on Wednesday to hit a 4.5-year low as a huge unexpected stockpile built in the United States reinforced concerns about a growing global oil glut. U.S. crude inventories rose 2.6 million barrels last week to 456.21 million barrels, the government's Energy Information Administration said. That's all for today. Also, keep an eye on today's U.S. initial and continuing jobless claims at 12:30. That's all. Thank you very much for joining us. See you next time. Bye-bye.